Welcome to Markets Today. I am your host, Ibrahim Sani. We start off with some sectorial outlook for the focus of today. It will be on the telecommunications sector. To help us understand better, I have on the line with me Janice Chong, the Director of Asia Pacific Corporates of Fitch Ratings. Janice, Fitch Ratings is basically saying that the telco sector for the Asia Pacific region is going to be stable, but there are a few outliers that we need to look out for, and one of them is India. Why do you think Fitch Ratings says that India is one of the more volatile markets to look at?
India is possibly the most competitive telecoms market in APEC, which makes it one of the most volatile telco market in the region. Industry shakeout resulting from intense competition from a newcomer called Reliance Jio has compelled incumbents to consolidate to meet competition. This comes at a time when telcos are facing high capex pressure to support rising data consumption. However, we expect price competition in India telecoms market to ease and return to revenue growth as Reliance Jio seek to monetize data services and start recouping return on investments. We therefore revise our sector outlook on the Indian telecom sector to stable from negative. I think in the case of in Singapore, so Singtel has a stake in Bharti Telecom, and in Malaysia, Axiata has taken India Cellular. Clearly, the Indian market is going through a period of consolidation phase. Competition, we expect competition to ease because I think ultimately we are looking at Reliance Jio's pricing strategy, which we expect them to start looking at monetizing their investments. So that should. We feel that should increase blended tariff by about 3 to 4%. But I think in the medium term, the outlook is still quite challenging in India. So the recent announcement on Bharti Airtel merger with Telenor, it is one of the sign or indication that industry consolidation is happening, and because there will be fewer players in the market, and that should actually drive a more stabilized competition in the next 18 months.
Janice, also in the report it was mentioned that some media companies and some telco companies are buying into media. How does this correlate with the sectoral outlook that we see right now?
Okay. So for example, in the regional telcos like Singtel and Axiata, they have been gradually buying digital assets. In the case of Singtel, they have invested in mobile advertising, data analytics, and video premium content. We think that it's still early days for these telcos to actually see some return on investments. But I believe for Singtel, they are actually guiding for lower net losses, narrower net losses this year. So we feel that the move towards media and digital companies by telcos is actually a natural move for telcos to acquire media and digital to strengthen their business model and stay relevant amongst consumers. So the rise of smartphones and social media branding means telco would need to evolve beyond a dumb pipe and take a defensive position to protect their position as a communications enabler. I don't think that it will be a price war. I mean, depends on what you mean by price war among telcos or price war among media companies. I think that it's more of a survival mode that essentially for a telco, you would need to move beyond just providing access, to communications like broadband or mobile network. You have to go into media, particularly with the rise in pay TV or IPTV services, in order to stay relevant in the market. So we expect the 5G technology standards to be finalized in the first half of 2018, after which companies will begin to firm up their investment plans. However, APEC's 5G rollout is likely to take place from 2020 onwards. So the actual rollout is likely to take from 2020 onwards, while the standards will be finalized by mid of next year. So in this region, South Korea and China are ahead in the 5G development. there is some uncertainty over the amount of capex that will be spent after 2018, although we expect 5G investments to be manageable within the current rating levels for South Korean telcos, such as KT Corp, which Fitch rates at A flat stable, and SK Telecom at A minus stable. So we say that these ratings are fairly stable because they have such robust operating cash flows. Also, because balance sheets are likely to remain cautiously geared ahead of the likely increase in 5G investments. With controlled capex, prudent marketing cost control, and working capital management. So we've seen that happening in South Korea already. I think there's a lot of uncertainty whether how much will be put in 5G allocation itself, but we are expecting that as we go along from 4G to 5G, we are looking at lower costs of offering network, in offering data, lower cost data network, and that should drive long-term efficiency, cost efficiency in that sense. So I would say overall the 5G capex allocation right now is quite uncertain at the moment.
Right, thanks Janice. That was Janice Chong of Fitch Ratings calling us all the way from Singapore. We'll take a short break, but when we come back, we take a look at Taiwan and the business opportunities that is unfolding there. Don't go anywhere.